Good morning. Welcome to IG's early morning call. It's St Andrew's Day. It's the 1st of March, Wednesday. Let's take a look at the headlines as we wait a stronger start across the European markets in today's session. We've seen some good results out overnight in the Asia Pacific markets, with Hang Seng leading the gains as a result of better than expected PMI data out across many Chinese economies, the fastest pace since 2012 in Hong Kong. HP shares late last night up 3.5% as it looks out to a slightly better future. Its guidance really centered around what's happening in a recovery in China. And orange juice, once again in the headlines, once again a new record high. We've got evidence that production is going to be down at levels not seen since the Great Depression. Let's take a look at what's happening on volatility. We're down for a third day in a row, indicating that money is going back into risk assets. And risk assets is where we start because we're looking at gains across the European markets in the session today. Yesterday, we closed down below this line of support at 78.76, which had been the prior line of resistance, which was established with those recent highs back on the 16th of January. So that was partially significant, I guess. It takes us back into this realm of this channel that we've been pricing in here when I took the height of that to give us the projection, the record high I was expecting at some point in the future. So this is still just a retracement, and we're better off now than we were as at the close last night. So we are expecting a stronger start to the European markets. There's a couple of companies worth watching on the London markets. In just a couple of minutes' time, I'll cover Persimmon and also Reckitt Benckiser. German DAX up like the London markets, but the candle at the moment is like London. We were just somewhat short of the candle on the way down yesterday. So at 15,411, again, just a retracement, but we'll have to see how things move as we enter into the meat of today's trade later on. French markets, similar sort of price action this early part of today's trade, indicating a slightly stronger start. So overnight in Asia, Hong Kong's Hang Seng stock index outperforming the region after that strong PMI data. The Hang Seng, when last looked, was up over 4%. We still got a little bit of the trading day left to go there. Nikkei 225 closed up with gains. And in fact, whilst we saw gains across much of the Australian day today, we ended down almost 9/10 of 1% as at the close. The Chinese manufacturing activity expanded at the fastest rate in more than a decade. The official NBS manufacturing PMI rising to 52.6 in February from 50.1 the previous month, a figure that far exceeded forecasts of 50.5. And as a result of that, we've seen these gains in the Hong Kong markets. The Caixin S&P PMI, a survey of China's private sector, rising for the first time in 7 months to 51.6, also well above expectations. I want to dial in what's happening in Hong Kong just to show you what's going on with the markets as things stand there at the moment. On the IG platform, it's called the Hong Kong 50, the Hang Seng stock index is represented. You can see clearly the session today up at 20,598. And in fact, this is a Marubozu candle. We quite often talk about these when you're looking at no wicks on these candles. And at the moment, at least, I can see hardly any sellers at 20,596. We keep going high. We keep going to a new high on the day. And we entered the start of the day's trade pretty much at the bottom. So it is an upward-facing Marubozu candle, indicating that at the moment, at least, because of the direction of travel, there are no sellers in this market as things stand there at the moment. Meanwhile, Australia's economy grew at its weakest pace in a year last quarter. GDP rising 0.5% in the December quarter compared to Q3, missing the forecast for a 0.8% rise. Third quarter GDP was, however, revised upwardly to 0.7 Q-on-Q. Annual growth remained at 2.7%. And as a result of that, I think that's one of the reasons, possibly why we saw a little bit of a drop in the Australian markets as at the close. The Australian dollar has eked out a gain today against the US dollar. We're up at 67.59. I'm not completely convinced this is an opportunity to buy this market. You can see that we are still in this trend. And this, at the moment, at least, this is just a small retracement. If you are long on this, at 67.61, you've got some headwinds starting at the 200-day moving average just above where we are at the 68-cent level, and that could be your price target if you're long on this on an intraday basis. But I think in the longer term, you can see this is a trend that has started. Hasn't yet disappeared, but this line of support at 66.88, which would be significant, I think, if you've got a candle close below there. And then you've got a little bit of support that we saw at the back end of last year. The point there at 65.88 is an area of support to watch out for. And then there's pretty much nothing all the way down to 61.7 cents. So we'll have to see how things go in the longer term. But at the moment, at least, we've got strength for the Australian dollar as a result of this upwardly moving revision to third quarter GDP and the fourth quarter number. Let's take a look at Wall Street close last night as at the end of the session. Losses across the board. And I think, as I said, the real momentum that's built into the European markets today on the upward trajectory has all been about what's been happening out overnight with the markets in the Far East doing some really good, solid work. That's the loss we saw yesterday across the US markets. I want to show you what's happening at the moment on the S&P 500. Despite the fact we got losses yesterday, we haven't really got much of a gain at the moment in the 24-hour markets. There is a green candle, but this direction of travel, I think for me, remains the case. 39.75 is where we're trading there. We've got support below where we are at 39.40, which is the 200-day moving average, which would be the support area to watch out for, which was tested at the back end of last week with this drop on the intraday trade on Friday, all the way down at 39.40. So that's an area of interest, I think, there to watch out for. Now, let's take a look at what else has been happening in the last half hour. We've seen some breaking news across the London or the UK housing market with the Nationwide Building Society showing that house prices fell 1.1% year on year. Now, that's in real terms. As we'll see in just a minute with Persimmon, we've got house price inflation. We've got general consumer price inflation. That's running at 10%. So if you say that house prices are already 10% lagging a rise in prices in the other areas of the market, this drop of 1.1% is only a small margin. But if you add that into the general swing in terms of inflation, obviously house prices, comparatively speaking, have dropped an awful lot more. The first annual decline since June of 2020 and the biggest drop since November 2012, which, as we know, was in the thick of the great financial crisis. Let's take a look at what's happening with sterling. Hasn't really got much of a relevance necessarily. I don't think it had nationwide house prices to sterling, but I do want to show you what's happening with sterling, down for a second day in a row at 178.52. To my mind, not a massive move there, but well, we'll have to see how things develop as we move later on into the day. Talking about later on into the day, let's see what's going on in the German markets, because we've seen some economic data. We are seeing some economic data out later on this morning. In around about an hour and 10-15 minutes time, 8:55 a.m. UK time, we get the German jobs data. The unemployment rate's expected to rise to 5.6% in February from 5.5% in January. And at 1 o'clock this afternoon, Germany's consumer price index is forecast to decelerate to 8.5% in February year on year from 8.7% in January. Is there a risk this could develop into upside? It's a possibility. We already know that the French economy is seeing faster inflation than had been expected. So we'll have to see how that number is. Euro dollar at the moment, seeing some gains. We've got a little bit of weakness in the dollar, and this is seeing the euro up at 106.14. Now, if you think there's an upside risk to German consumer prices, you'd be long on this market. Your stop would go in this area down here at around about the 105 level. 106.14 is where we are. And if there's any upside on that number out at 1 o'clock today, if it is a stronger than expected number, that would be the direction of travel. We'll have to see how things develop. And of course, if it's a weaker than expected number, I think then that could well see some air taken out of the tires for the euro against the US dollar. In the US, at 3 o'clock this afternoon, we get the ISM manufacturing PMI data. It's expected to rise to 48 in February from 47.4 the previous month. That still is in contraction because it's below 50. So that itself would be a potentially significant move. Now, I promised you we'd take a look at what's been happening within the house builders this morning, Persimmon specifically, because we've got some data out there today, posting an underlying operating profit of £1 billion. That's up 2% year on year. Profit before tax down to 730 million from 966 million this time last year. Total revenues coming in 200 million better at 3.82 billion. The average selling price up 5% year on year, reflecting house price inflation. That's really the cost of bricks, the cost of tiles, the cost of all the raw materials, plus the cost of labour, which is rising because of this rise in CPI. As we were hearing just now recently from the Nationwide, the house prices have dropped 1%, but Persimmon is still able to sell at a 5% premium. This is the share price chart. As of yesterday's close, we're up for a second day at 14.52. If you're long on this going into the numbers, I think these, broadly speaking, won't be taken necessarily as massively negative, I don't think, for Persimmon. And if you're long on this, your stop goes below the 140 area, 452 is where we're opening today, as I say, after 2 days of gains on that particular market. Let's look at full year like-for-like sales at Reckitt Benckiser, the personal products company. It sells drugs over the counter. It sells cleaning products. It sells a lot of what we use around the home. Full year like-for-like sales up 7.6% to 14.45 billion. Operating profit up 9.2% at constant currencies at 3.44 billion. The full year dividend is up 5% to 183.3 pence per share. And I think broadly speaking, again, this is another company which is looking like it could well see some gains. I just want to show you this trend that we've got here from the lows we had back earlier on this year. What was that? The low point we had back on the 30th of January. We've seen this slow grind higher. In the last couple of days, we've seen a hit on this stock price not seen since the 20th of January intraday. Yesterday was a day on the way down. If you're long on this, I draw this line here because if you're long on this chart, I think you will put your stop below this area down here. So your stop at around about the 56.90 level. 57.70 is where we are opening today. And as I said, if you look at the numbers this morning, I've only given you a very sort of surface sort of glide around the numbers, and they on the whole look pretty good. I haven't had a look at the detailed outlook for the this year, but certainly things looking good going to the back of last full fiscal year at Reckitt Benckiser. Meanwhile, Europe's largest meals delivery company, Just Eat Takeaway.com, reported EBITDA of 19 million euros. Now, this is an interesting company because this has had all sorts of problems. EBITDA coming through at 19 million euros after a 350 million euro loss last year. Revenues up 4% at a 5.6 billion. So it shows that more of us are increasing our spend and our demand of Just Eat takeaway services. But you can see in the long-term picture here that we have been falling since the highs that we had back in the stock on the 15th of October 2020. Just Eat Takeaway is a conglomeration of the UK's takeaway service that merged with takeaway.com. And Just Eat was listed in the London markets. It's now just listed in the Netherlands. The stock will open there, you can see today at 18.13. And we are, I think at the moment, I don't know where we're going to go in terms of the move of the share price at the start, but I can't see much upside necessarily from these numbers out this morning. One company reporting upside, though, was Hewlett Packard. Wasn't the earnings out last night that particularly impressed either one way or the other? It was the outlook. And the outlook is based on this idea that China is going to see some pickup in demand. Earnings per share coming through at 75 cents. Estimates have been for 74. So that was, technically speaking, a tick. It was in the right direction, at least, on from estimates of the company. PC and printer maker posted earnings there and revenues at 13.8 billion. We've been looking at that for 14.15 billion, so that fell short of estimates. However, look at what happened late yesterday. Despite the fact we saw a punch lower to levels intraday not seen since the 26th of January, then came the recovery. HP's forecast reassured investors, which lifted shares as at the end we even closed past the 200-day moving average, up 3.56% at 30.42. The group said it anticipates adjusted profit above estimates between 73 and 83 cents for the current quarter, and it's maintained its full year earnings target. HP counts on benefiting from cost cuts and a recovery in demand in the Chinese market. Today, we are awaiting earnings from Dollar Tree, Snowflake and Salesforce. Three companies to watch out for today. I think they're all before the bell. Certainly Dollar Tree and Salesforce, watching out for that. Snowflake maybe after the bell. You've got a snapshot there of some of the numbers to watch when we see those companies report earnings later on. I want to kick in now with what's happening on the commodities markets, crude oil particularly, where we are at 2-week highs. Let's take a look at some of the news behind what we've got in the price of oil. API crude oil inventories yesterday showing yet another substantial increase last week. Crude oil stocks rising 6.2 million barrels, taking the total number of barrels gained so far this year to nearly 59 million. Gasoline stocks rising nearly 1.8 million barrels, while distillates falling by 341,000. I want to show you the US crude price chart because it is up again today. The EIA revealing yesterday that US crude oil production fell in December to 20.1 million barrels per day. It's lowest since August 2022. And that would be a reason to buy into this. But I think what happened yesterday was expectations that we've got an increase in demand coming from China. And that's evidenced, as I said, overnight by this news coming through on the PMI data. I want to stay on the charts, just quickly take a look at a couple of other areas of interest in the market before we get to orange juice, which I think for me is one of the news headlines of the day. I'll save that for just a moment because I want to talk first of all about what's happening with gold, which is up for a third day in a row. As I was talking about some slight dollar weakness today, and we're benefiting from that a little bit. You can see in the longer term trend, this pullback here was just a retracement. I think, let me just quickly put a Fibonacci on that just to work out what's happening from the lows that we had there. So you can see we were well away when we got to the bottom there from the 61.8% retracement. But I think actually it depends on where you put these things as to whether or not you are looking to get rid of that, and I can then take this up here to get you a better idea. That was a lower low there, so you can see that on this chart at least we did go into this area down here, this area of support before this bounce. Now let's just take this as a long trade. If you are long on gold at these levels, you're just going to put your trade on. The stock goes down here at around about the 1774 level. 1834 is where we are, and you'd see this longer term trajectory on the way up again. I'm not necessarily sure that's exactly where we should be reading this, and I'm wondering whether perhaps maybe this little bit of an uplift at the moment is actually just a small retracement in what is otherwise a trend on the way down. You wouldn't want to be short today, but I think if you're short in the longer term, stop goes in this area up here at around about the 1870 level if you are short on gold in the longer term. And I was late last week, before I went on my long weekend away, I was talking about a price target down here at 1774, which is a 200-day moving average, which for me is this area of interest so far as I'm concerned in the markets there at the moment. Let me stay on the chart. Just wanted to update you as well on what's happening with copper so that we can get an idea on what's happening with some of these base metals. That we've seen a third day in a row of gains, and significantly, I think possibly big round numbers being broken today, 9,000. And if you do understand and believe that this Chinese story is picking up again, you wouldn't want to be caught short on the price of copper. Now, New York frozen orange juice has just seen another new all-time high. It's only by a whisker, but it is nonetheless a new record high for New York orange juice. This comes after the release of new official forecasts. Orange production in Florida, which counts 80% of the US production, is expected to fall by nearly 2/3 from this time last year at levels not seen since the Great Depression. The United States Department of Agriculture now estimates that production will reach 16 million boxes. Now that's down 2 million boxes from the January forecast, which should be 61% less than last season's production. In 2022, you'll remember that Florida was hit by Hurricane Ian, Hurricane Nicole, a January freeze, and a disease called citrus greening. And now producers need to replant, but all this takes time. Let's take a look at the orange juice share price of orange juice, 25,212. We've got a breach once again of this 25,000 level. Now, at least 3 years are required to get a tree to bear fruit. And this citrus greening and the some of the crops taken out means that some of these producers won't make a profit before 6 to 9 years if you plant trees now. To give you an idea, the economic consequences of Hurricane Irma that hit Florida in 2017 are still being felt in the region, which is why we've seen this move up in the price of orange juice. Analysts think it's not going to come down anytime soon. In fact, it's expected to go higher, according to some analysts, once current stock has been drained out of the system. So an uptake in orange juice in today's session. That's it. We're back at 10:30 for charting the market. Do watch out for Persimmon at the start of today's trade. I'm going to go long when I finish this broadcast on Persimmon as we go into the stock trading today. That's my own personal opinion. Not too sure about Reckitt Benckiser. We'll have to see how things develop there. But I think Persimmon is possibly one of the stocks that's going to help to contribute in what is otherwise a positive day for the markets across Europe.